Welcome back to the Gold IRA Blueprint podcast. You know, we like to do these deep dives every now and then, and today we're diving into the world of precious metals and family offices. We'll be exploring how these investors are using gold and other precious metals to navigate this crazy economic climate and build a legacy. And if you're considering a gold IRA to help with your retirement plan, be sure to visit goldirablueprint.com/exclusive for a free checklist that can help you choose the right gold IRA company. Can be a great resource, especially if you're new to precious metals investing.
It's certainly a hot topic these days. Yeah, we are seeing a lot more family offices turning to precious metals, and with good reason.
So let's talk about that. Why are family offices, who are known for their long-term outlook, suddenly so interested in precious metals? It's not like gold is, brand new. Yeah.
You're right, gold has been around forever, but its relevance in a portfolio seems to be changing. The world is in a very volatile state right now. Inflation is still a big concern, and traditional markets are, well, to put it lightly, experiencing some turbulence. Think back to 2008, for example. During that financial crisis, gold actually went up in value while the stock market was plummeting.
Oh, yeah.
Because gold is often seen as a safe haven asset, something that holds its value or even goes up when other assets are declining.
So it's kind of like an insurance policy for your wealth. But it's got to be more than just preserving capital, right? I mean, family offices are also looking for ways to grow their wealth for future generations.
Absolutely. And that's where the diversification benefits of precious metals come in. They don't typically move in lockstep with stocks and bonds. Like during the tech bubble in the late 90s, gold remained relatively stable even as tech stocks soared and then crashed.
Oh.
It's the beauty of low correlation. When one asset zigzags, the other might just stay the course. And that can help smooth out the ride in your overall portfolio.
Yeah, it's fascinating how precious metals can actually, help create a more stable and resilient portfolio, especially in times of, all this economic uncertainty.
Exactly. And we can't forget the tangible nature of precious metals. You can hold them, store them, pass them down. This is particularly appealing to family offices who are focused on building a legacy. That extends beyond just, numbers.
Yeah, there's something about holding a gold coin that has been passed down through generations. It represents more than just money. It embodies history, resilience, and a connection to the past. It's like a tangible piece of financial security.
And speaking of passing down wealth, did you know that holding gold in a self-directed IRA can help you avoid probate? Probate can be a long and costly legal process when assets are passed on, so this can be a real advantage for families looking to simplify things for their heirs.
That's an interesting point. We talk a lot about gold IRAs on this show. But for those who are new to the concept, can you give us a rundown of what a gold IRA actually is?
Sure. A gold IRA, or a precious metals IRA, is essentially a self-directed individual retirement account where you can hold physical gold and silver, platinum, or palladium instead of traditional paper assets like stocks and bonds.
So it's a way to diversify your retirement portfolio with tangible assets, and you get those potential tax advantages of an IRA as well, a double win.
Exactly. And for our listeners, if you want to learn more about the ins and outs of gold IRAs, make sure to check out our website, goldirablueprint.com/exclusive. We've got a free checklist there that'll help you find a reputable gold IRA company. It covers everything from fees to storage options, so it's a great starting point for your research.
Perfect. Now let's dive into some specific strategies. I know there are different approaches to incorporating precious metals into a portfolio. What are some of the models that family offices are using these days?
Well, one approach is the core satellite model. Imagine your portfolio as a solar system.
Okay, I like where this is going. Tell me more.
Your core holdings are your most stable investments. Like the sun, that's where gold comes in. A typical allocation might be 5 to 10% in physical gold. This forms the stable base of your portfolio, offering that inflation hedge and safe haven status we talked about. And then you have your satellite investments, which orbit around the core. These are your opportunities for growth and might include assets like silver, platinum, even gold ETFs.
Hold on, ETFs. I thought this was all that physical gold.
There are nuances to consider. Physical gold gives you that tangibility, that feeling of real ownership.
Right.
But ETFs offer liquidity and ease of trading.
Yeah.
And they can also provide higher returns, though, of course, with added risk. It's about finding the right balance for your goals.
So understanding the trade-offs, and I'm guessing taxes play a role too.
Absolutely. Taxes are a crucial part of this. With ETFs, you're generally subject to capital gains tax, much like stocks.
Oh, nice.
But if you hold physical gold in a Roth gold IRA, the growth is tax deferred. And you won't owe any taxes on the gains until you withdraw them in retirement. which is a significant advantage, especially for long-term investors.
So for someone looking to, minimize their tax burden while investing in gold, a Roth Gold IRA might be the way to go.
Mm-hmm.
The core satellite approach sounds pretty straightforward, but I'm guessing there are more complex strategies out there.
There are. For those who are particularly risk-averse, the risk parity model might be appealing.
Risk parity. That sounds interesting, but a little intimidating. What's the idea behind it?
The idea with risk parity is to balance risk across your portfolio. So instead of just focusing on potential return, you allocate based on the risk each asset class carries. Since precious metals historically show low correlation with stocks and other assets, they can be a key part of this model.
So less about chasing the highest returns and more about building a portfolio that can, withstand volatility.
Exactly. Creating a smoother ride, minimizing potential losses during those turbulent times. Some investors even use leverage within this model to increase their exposure to precious metals and amplifying those risk mitigating effects. Of course, leverage comes with its own risks and requires careful consideration.
Yeah, for sure. It's about understanding the tools and using them strategically.
Oh.
Now, you mentioned there's a third approach. What's that about?
The third model is called thematic allocation. Here, you're investing in long-term trends that you believe will shape the future.
Okay, so how do precious metals fit into this?
Well, think about this. Wealth preservation and generational wealth transfer are key concerns for a lot of family offices. Gold and silver have been reliable stores of value for centuries, making them a natural fit for this theme. They can act as a hedge against inflation, protecting wealth from erosion, ensuring it can be passed down to future generations.
That makes sense. Resonates with that idea of building a lasting legacy, passing on something tangible and enduring to your heirs, not just numbers on a screen, but something real.
Precisely. And within this thematic approach, you could also look at metals like palladium. It's used in emerging technologies like fuel cells and electric vehicles. So it ties into the theme of technological advancement and potential future growth.
So thematic allocation is about identifying those big macro trends and positioning your portfolio to benefit in the long run.
That's it. It's about aligning your investments with your beliefs about the future. And remember, we've talked about the estate planning benefits of holding precious metals in a self-directed IRA. If leaving a legacy is part of your financial plan, a gold IRA can be a really powerful tool.
For sure. And speaking of gold IRAs, I want to remind our listeners that there's a fantastic resource available at goldirablueprint.com/exclusive. It's a free checklist designed to help you choose the right gold IRA company. It covers everything from fees to storage options, so you're well informed before making any decisions.
It's a great resource. Now, taxes can be a big factor when it comes to precious metals investing. Whether you're holding physical gold or investing through a gold IRA, understanding the tax implications is crucial. As we head into 2025, are there any specific tax considerations that our listeners should be aware of? There are. One of the most important things to understand is the difference between short-term and long-term capital gains. This applies whether you're holding physical metals or investing through a gold IRA.
Right. The length of time you hold an asset can really impact your tax liability.
It can. Let's say you buy physical gold and sell it within a year.
Okay.
Any profit you make is considered a short-term capital gain and is taxed at your ordinary income tax rate. That could be a big chunk of change depending on your bracket.
Yeah, that doesn't sound good.
Yeah.
So holding on to it longer seems like a smart move.
It is. If you hold those metals for more than a year, any profits are considered long-term capital gains and are taxed at a much more favorable rate. Patience can really pay off when it comes to taxes.
I see. But what about gold held within an IRA? Are those gains taxed differently?
That's one of the best things about a gold IRA, or any IRA for that matter. The growth is tax deferred.
Okay.
This means you don't owe any taxes on those gains until you withdraw the money in retirement. It's like a tax-sheltered haven for your nest egg.
So it's like delaying that tax bill until later, potentially, when you're in a lower tax bracket during retirement. That's pretty strategic.
Exactly. However, it's important to remember that when you do start taking distributions in retirement, those withdrawals will be taxed as ordinary income.
Right.
So it's crucial to factor this into your overall retirement plan.
All right, so we've got short-term versus long-term gains, tax-deferred growth within an IRA. What else should we know about, especially families who are thinking about passing on their wealth?
Estate taxes are another key consideration. For 2025, the estate tax exemption is set at $13.6 million per individual.
Okay.
If your estate, including your precious metals holdings, exceeds that amount, the excess could be subject to estate tax.
$13.6 million, that's a lot. But for some families, especially those with substantial precious metals investments, that threshold might be a concern.
It could be. That's where strategic gifting can be a valuable tool. In 2025, the annual gift tax exclusion is $17,000 per recipient.
Right.
You can gift up to that amount to anyone you like without incurring any gift tax.
Wow.
So you could strategically gift a portion of your gold holdings each year to your children or grandchildren,
Oh,
effectively reducing the size of your taxable estate over time.
that's a smart way to manage estate taxes and ensure a smooth wealth transfer to your heirs, like giving the gift of financial security.
Exactly. It's all about planning ahead and leveraging the tools available to you. Now, before we wrap up, I want to mention storage.
Okay.
If you're holding gold within an IRA, you can't just store it anywhere. The IRS has requirements.
Yeah, I can't imagine keeping gold bars under my mattress would be IRS approved.
No. The IRS mandates that gold held within an IRA must be stored in an approved depository. These are secure third-party facilities that meet strict IRS standards for safety and security.
So it's about protecting your assets and staying compliant.
Exactly. And it's crucial to keep good records of all your transactions and storage arrangements, just in case of an audit.
Good reminder. We've covered a lot today. Different investment strategies, tax implications, and storage considerations. Seems like there are many ways to incorporate precious metals into a portfolio, each with its own pros and cons.
There are, and the best approach always depends on your individual circumstances, your risk tolerance, and your long-term goals.
Okay, so to wrap things up, let's do a quick comparison of the two most common ways to hold gold. Directly versus within a gold IRA. When it comes to taxes, what are the differences?
With a gold IRA, you get that tax-deferred growth. And if you choose a Roth Gold IRA, you could even have tax-free withdrawals in retirement.
Okay,
With direct ownership, you'll be responsible for paying capital gains taxes when you sell.
got it. Now, from an estate planning perspective, are there any advantages to one approach over the other?
Definitely. A gold IRA can help streamline the inheritance process. It can potentially avoid probate, which saves your heirs time, money, and hassle. Directly owned gold, on the other hand, would be subject to probate, which can be a lengthy and expensive legal process.
Yeah, that's a big advantage for those thinking about generational wealth transfer.
It is. Now, liquidity. How easily can you access your gold if you need to? With direct ownership, you have full control over your assets and can sell them at any time.
Right.
With the gold IRA, there are usually some restrictions on withdrawals, especially before you reach retirement age.
So direct ownership is more flexible, but a gold IRA provides those tax advantages and estate planning benefits.
Right. Last thing's storage. With direct ownership, you have more options. You could store your gold at home in a safe deposit box or even a private vault.
Oh, well.
But a gold IRA requires storage in an IRS-approved depository. While this ensures security and compliance, it does add another layer of cost and logistics to think about.
This has been a really great deep dive. Our listeners now understand how precious metals can play a vital role in building and preserving wealth, not just for themselves, but for future generations too. Here are a few takeaways. Consider allocating 5 to 15% of your portfolio to precious metals. Adjust that percentage based on your risk tolerance and long-term goals. Explore the benefits of a self-directed gold IRA, particularly if you're looking to combine wealth preservation with estate planning advantages. Stay informed about current tax regulations to optimize your returns and minimize those potential tax liabilities. And for those ready to explore the world of gold IRAs, be sure to visit goldirablueprint.com/exclusive. There you can download a free checklist that'll help you choose the right gold IRA company. It covers everything from fees to storage options, so you're well prepared.
It's a fantastic resource.
As we end our deep dive today, I want to leave you with a thought. As family offices increasingly embrace precious metals, how might this shift impact the broader financial landscape in the years ahead? It's something to think about as we navigate this crazy world of finance.
It is. The role of precious metals is evolving, and their importance in a modern portfolio is becoming more evident. It will be fascinating to see how these trends unfold in the years to come.
You got that right. Thank you for joining us for this deep dive into precious metals and family offices. Until next time, keep learning, keep exploring, and keep building that golden blueprint for your future.